All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're talking about is our long-term ETF strategy for TSLY, CONY, and also CLIP. So what we're going to do in this video is I'm going to tell you what my plans are for TSLY long-term, what my plans are for CONY long-term, if I plan to sell, hold, half my position, double my position, what I do with CLIP, and also what I'm going to do with these dividends. I am going to show you some stocks that I might be looking to invest in the future with those dividends, and we're also going to just take my average yield on cost for TSLY times the number of shares, obviously, or sorry, not the yield on cost, but my average purchase price. And I'm going to show you the returns over a 3-year period if TSLY is to hold out. So everything today is talking about these 3 ETFs and my plans for them for the future, what I see potentially for the future for them, and how I plan to respond. So if that does sound good, please do remember to subscribe. We're up to 3,631 subscribers, moving up subscribers every single day. I have so many videos planned out, guys. It's not even funny to make in the future. I could make probably 5 videos every single day, but I'm going to hold off and continue to make 1 video every single day. So I hope you guys do enjoy. This one is the long-term strategy of our ETF. So starting with TSLY. TSLY, just to bring up my portfolio here, I actually have a current position, 100 shares, average purchase price about $14.51. And you can see here, I'm down roughly 25 cents. That equates to about $361. And so that is a significant loss. Sure, my annual income's up to $724, but for the current time being, that is a pretty big loss. And we see that in TSLY share price. Now, I'm actually going to bring up TSLY just because I want to show you how it's been trending lately. And unfortunately, it's been trending a little bit down, but I'm going to share with you my plan for the future. So looking at the 6 months here, we were up to a share price of about $18 in TSLY, but we're currently down to about $10. And my number one fear with TSLY is them doing a reverse stock split where they maybe bring the share price back up to $20, but they half the number of shares that we have in our account. So this would go to 50, but TSLY share price would go back to 20. This would mean less dividends, and I could make a video on this in the future, but I'm just going to say that is kind of a fear for me right now. So what I would love to do is I would love to see TSLY enter a little bit of a bear trend. I know Tesla, the underlying stock, is hitting some recent headwinds due to the fact of the Cybertruck kind of not launching, it having some trouble in off-road terrains, and that's kind of putting a damper on Tesla, but then also TSLY. But what I'd love to do, what I'd love to see happen is a little rally in TSLY, let's say back up to this $13 marker. And what I would do is sell half of my position of TSLY and invest it into CONY. This is what I would do. Currently for CONY, I only have about 4 shares. If I could even find it here. Yeah, 4 shares right here at an average purchase price of $25.47. It says I'm down about 6.5%, but that's also due to the fact that they paid out a really substantial dividend coming in at roughly 125% if they were to pay out that dividend continually for the year. So CONY's been paying some pretty high dividends. I'd love to half my position in TSLY, put it into CONY if I see CONY go on a slight bear run. Obviously, the absolute best case scenario, TSLY appreciates into a bear run. TSLY appreciates into a bull run. CONY goes into a bear run, and I pick up some shares of CONY at a great price. Maybe I'd like to get it in at this $22 marker if I could, but I think CONY still has some room left to run with the underlying stock Coinbase doing very well. And I think over time that would still appreciate upwards. So I'm definitely looking bullish on CONY as well. Now, since we talked about TSLY, since we talked about CONY, why don't we get into CLIP? CLIP is the Crane Shares China Internet and Cover Call Strategy ETF. I'm actually very happy with my position in CLIP. Go in here, I'm going to show you CLIP in my portfolio. I have 145 shares. I have a current average share price of $18.57. I'm down 12%, which is roughly $320, but every single month from CLIP, I'm receiving $100 in dividends. CLIP is a really big dividend payer for me. It is my biggest monthly dividend, as you can see right here. Pull this up, roughly about $100 or so. And CLIP, relative to its underlying stock, KWEB, has performed very well. You could see here that CLIP actually doesn't necessarily match KWEB to the downside. It says that in its prospectus that Clip is subject to all the potential gains of KWEB, but I've noticed that KWEB has actually fallen a lot more than Clip, and Clip is actually able to recover a little bit more on the upside than KWEB. So I think Clip long term is actually doing very well, although I am down about 12% or so in the stock. As you can see, I've been receiving some pretty amazing dividends, and the fact that I've been receiving roughly about 48% from these dividends is significantly outweighing this 11% loss. So overall, on my position for Clip, I'm very happy, and I will just continue to hold Clip. So far, we have TSLY cut in half, invest that half into CONY. Clip shares probably going to stay the same, just going to continue to reinvest. But what will I do with all the dividends generated from these funds? What I'd love to do is invest them into still high yield funds, but definitely a lot lower yields. Now, I see these funds as a lot more sustainable. You're looking at the max price chart history of these funds. Okay, of course there was this massive run up, but you're looking here to about the 5-year chart for, let's say, Dynex DX. You could see it has depreciated quite a bit from $18 down to $12 over the past years, pretty much appreciated about -5 to 10%, but they also do pay a really good dividend at about 13%, which you could reinvest and build your shares. This is what I'd ultimately love to do. I'd love to take the dividends from CONY, TSLY, and Clip and invest them in a little bit more stable, capital appreciating, high yield dividend funds like DX or even ABR, Arbor Realty Trust. See here, paying out a 12% dividend, and over the past year, even 5 years, you can see they've actually pretty much appreciated from about $13 to $14 currently, while still paying a 12% dividend. So that's what I would like to do. I did make a previous video before my SQ video. It says it's never been easier to live off dividends with less money, and I think that's definitely true. We obviously see that with not only TSLY, CONY, and Clip, but also with these high yielding dividends that are relatively stable in their stock price. And that is ultimately what I would love to get invested into. I do understand TSLY and their massive 60% return, but I think long term it's depreciated a little bit too much, and I'm worried about that reverse stock split. CONY for the current time being is doing absolutely fine. I don't see any kind of stock split in their future as long as they kind of keep this little rally going and remain relatively flat. But going to TSLY, I mentioned that I have an average share price of about $14.51. I have 100 shares, so this was my total investment, $1,451. If TSLY could hold out for 3 years at its 60% dividend, we're looking at about $914 of annual income. That is without drip. With drip, you could see here, if TSLY was just to hold up for another 3 years, or sorry, actually really 2 years, because we've already been investing for almost a full year, you could see our annual dividend would more than double our initial investment, or close to double our initial investment. So if TSLY is able to hold out, they can avoid doing that reverse stock split. If Tesla is able to recover and push TSLY share price a little bit higher, we could definitely see some pretty insane returns from TSLY. This would go the same for CONY. That's why I want to continue to hold a small position of TSLY, even though it might be a little iffy going into the future. CONY to double my position. So with all that being said, this was my long-term ETF strategy on TSLY, CONY, and Clip. I want to say thank you guys for hanging in there, and let me know in the comments what your long-term strategies are for these 3 funds, or for your Yieldmax or really high yielding dividend income ETFs. If you'd like to invest in some smaller yielding ETFs, if you already do that, or if you're just going to continue to reinvest and ride these boys out till the end. So I hope you guys enjoyed this video, got a sense of what I'm doing with all my shares and everything like that. Please do remember to subscribe. We're up to 3,631 subscribers, way beyond 300. So I hope you guys did enjoy this video. I hope you guys do take care, and I will see you guys in the next one.